Kerry, the AI trade, talk to us about that, because, I mean, one of the worries 3 weeks, 1 month ago when DeepSeek dropped was, oh no, right? All these big U.S. AI hyperscalers, right, have dropped, I don't know how many $1 billion building this enormously high moat or wall. Then, DeepSeek comes along and let's say the wall was 10 feet tall. They come up and go, look, I've got an 11-foot ladder, right? And you know how much? You really want to know how much I spent on this? It was just a fraction of the cost. So I mean, the worry was that it would mean capex, which has been driving a lot of these big AI names, that would be scaled back. Do you think it will be, or will they be forced to continue spending to just keep up?
Yeah, I think it's a case of the curse of being the winner. If you spend all this money and suddenly you can't effectively sell the product, you often lose out, as we've seen in other instances around the world with like auctions of, say, 5G networks, for example. But for this one, I think there's still somewhat of a moat there, given that there is a dominance in the technology and the leading edge of that technology, which supports the US sort of AI industrial complex. However, we are looking at the fact that these things are getting quite highly valued. We're looking towards other parts of the US market for seeing that rotation down in terms of the market cap structure and across other sectors, as we see the US economy being relatively resilient, has good momentum heading into this year, as well as being supported by some of the policy dynamics coming out of the US administration. So maybe a case of trimming some of that exposure to those AI names and looking to reallocate somewhere else. But certainly we do very much believe in the secular theme of AI. I think playing it now through the market could be a little bit more of less around the hyperscalers and the producers of this technology, and then thinking a little bit further along the AI value chain. So the users of this technology, the software companies, maybe utilities, and thinking about energy providers, and those further opportunities that may be a little bit better valued when it comes to the prospects in the equity market and where you might see better upside. It's very difficult to keep repeating these very large returns we've seen across these names for the last couple of years, and the expectations for them to deliver are very, very high.
So this whole idea that if the AI trade should be focusing more downstream at the consumer is based on the idea that, if the cost of compute goes down, it means the cost of AI goes down and gets cheaper as well. And if you're focusing on the consumer, that is where the fattest margins are.
Yeah, it's the whole idea that it would uplift productivity across the economy. You would see businesses benefit, adoption rates may increase. And, that was the notion when this whole AI and open AI thing kicked off. It was going to be something that was easily accessible and affordable. And so that's still the way it should go. If it does boost productivity, that does generally lead to a better outcome for the economy as a whole, better earnings outlook, and increasing the prospects for the US equity market as well. But, that does take some time to feed through. But that would be the narrative around why a lower cost AI would be more beneficial than thinking about something that's held very narrowly by a few companies.